focus on defense for a bit. One of the companies is Azad Engineering, not strictly defense, but while they're doing a lot of things, the recent announcement post the results around they're getting shortlisted or getting a contract under a DRDO agency has been interesting. Vishnu Malpani, whole-time director at Azad Engineering, Johnson right now with his with some thoughts on what's happening in the company recently and this particular verdict as well. Vishnu, good having you. Thanks for taking the time out and joining in. Before we talk about the developments, just a word on the year gone by, FY24, and have you given a formal guidance for what could happen in FY25? Because the last couple of times that we've spoken to Azad, there have been a lot of exciting developments with Rolls-Royce, with some of the others. Do some of them come to fruition in terms of numbers in FY25 over FY24?
Yeah, thanks, Neeraj, for having me on the show. First of all, I'd like to just tell you about the year that gone by. So in FY24, we registered 35% growth in our top line. So we delivered a top line of 340 crores with an EBITDA of 117 crores, and with a PAT margin of about 17%, which is 58 crores. So growth in our top line was about 35%. If you look at the growth in our bottom line, which was PAT, our PAT is roughly 6.9 times of what we delivered last year. And because, last year we told the market that, the PAT that was delivered, 8 crores optically, was because of certain convertibles that were there and it was one time. And so it should get normalized. So this year we've been able to do that. And in terms of, our EBITDA margins, we've delivered a 34% EBITDA. And, we've over-delivered on the guidance that we had internally. And for the guidance for the current year, we are looking at a 25 to 30% growth in terms of our top line and bottom line. Now, these are some of the interesting developments that have happened on the financials of the company, but there has been a lot that went by last year for Azad in terms of what we've achieved in business. We've signed multiple contracts with our key customers. We onboarded with Rolls-Royce, signed a long-term contract with them for manufacturing critical rotating parts and for their defense platforms. And this was a big foot in the door for Azad because Rolls-Royce is a very big opportunity, in the engine manufacturing space. And for us to get in there, manufacturing critical components for them is a big thing. And this is just a starting point for us. Similarly, we signed 2 other contracts with our client Baker Hughes, which is again a long-term contract. So that is also a sector that we are looking at diversifying into, and we did that. We signed a $35 million contract with GE Vernova, which is also a very strategic contract, which is going to extend over the next 7 years. Recently, we won an order with our esteemed GTRE, where today our capabilities from a component manufacturing for Azad is now moved to assembling and manufacturing an end-to-end turbo gas generator engine end-to-end. And we won that order from GTRE DRDO. And over the next year, we should be developing that. We are their sole development cum production partners. And the first set of engines should be delivered in FY26. So this is, sort of taken our capabilities to a completely new orbit. And all of these developments that I've told you are purely based on the technical capabilities that we've built in and the commercial viability that we've been able to show to our customers.
So we would want to talk some numbers as well. Just wondering, you will maintain margins, I reckon, in FY25 or FY24, 34-35%, right?
So we've given a margin guidance also. Our guidance will be in the range of 30 to 36%.
Okay, fair call. I just want to pick up on one thing, and my colleagues would want some more questions as well. But this GTRE DRDO order, right? You mentioned that you are the sole production agency. Are there some numbers to this? You're delivering it in FY26, but are there some initial numbers, and can these numbers expand over time?
So, Neeraj, I won't be able to comment on that because this is a strategic contract that we're signing. So can't reveal more details, but I can tell you this will be used for defense applications, and it is, so India has been good at designing engines, right? Indigenizing engines since the 1980s, and I think our responsibility will be to get this, design of a reality into an output, which will deliver on the testing parameters that have been set by GTRE and DRDO. I can tell you that it's very exciting. Internally, right from, our CEO to all of us, are very excited in delivering the first set of engines. We believe, this should be delivered in FY26, and you'll be able to see the developments then. I should be able to talk to you about it more, maybe in the couple of quarters. But as of now, I can tell you that this is going to be used for defense applications for the country.
Vishnu, I'll just take a cue from that. While you can't quantify the order for us, give us a sense of payment cycles. Is it milestone based? I understand it's a long-term agreement and a strategic one that you have, and not just for this one, even for a Rolls and a Baker Hughes. When we spoke to you last time, I think there was some apprehension in discussing the size of the order. Can you share with us a little bit more on that today, and also tell us how payments are going to be made, and when will this reflect on your top line?
So there are contracts where I can talk about the numbers, and some of the contracts I'm restricted to share information. So, for example, Rolls-Royce contract is again a strategic one where we're working with the defense platforms. We're working on 2 engine programs there. I can only tell you that Rolls-Royce has a lot of engines in their portfolio, and we are starting with 2 engines and manufacturing critical components. So you can imagine the size of the opportunity right there. I won't be able to talk more about it, but I can tell you the revenues will start reflected in FY26. So FY25 is when we do the development of this, and FY26 is when this gets reflected in our revenues.
Vishnu, how significant are these recent order wins on your top line? So while you can't quantify it for me, can you share a percentage with me?
Okay. I'll try and give you some sense to it. So last year, if you look at our cumulative contracts or order books put together, so last year we were looking at roughly around 2,000 plus crores was the estimated value of our contracts in the last year alone. Today we are sitting on estimated contract size of about 3,200 plus crores. So that is roughly addition of roughly 1,200 plus crores in put together in amongst all the opportunities that we spoke about. So that's the pretty much. That's the quantification that I can tell you. So our order book has moved from roughly 2,000 crores to about 3,000 plus crores, if you look at the estimated size of contracts in the last 1 year.
Right. Vishnu, Tamanna here, and fantastic growth over the last financial year. You've talked about how many milestones, and it's been a big year as well. I'm trying to understand if that's a pace that you can keep up through this next financial year. Do you have an order book outlook of new orders coming in? How many of those are yet to be executed? Can you give us a sense over there? And is this focus more indigenous or also export? Because I know export is a big part of your revenues.
Yeah. So Tamanna, first of all, I'd like to answer your first question, which was, can we sustain this kind of growth? I think we can definitely sustain. We are addressing a pretty large market. Our target addressable market is roughly $28 billion. And what we are doing in terms of our revenue is barely scratching the surface. We are at less than 1% of the market. So we can sustain this level of growth for a really long period of time. In fact, in the near term, we are looking at 25 to 30%. When we have the new capacity that comes in, our growth rate also will be higher than what we are projecting right now. So that is one. Second, in terms of
when is just on that, when is this capacity coming in? When you talked about the new capacity coming in, what's the timeline for that?
We are adding 10 times more capacity to what we have today, and this capacity would come in FY26. So FY26, we will be doing incremental revenue will come out of the new facility for us.
How will you fund it, Vishal?
I'm sorry?
How will you fund these very aggressive expansion plans that you've mentioned?
No, so we raised, in our IPO, we raised about 240 crores. And our plan was to deploy about 80 to 100 crores in developing the infrastructure, which is 10 times the capacity. And the balance, about 200 crores, was to be deployed in plant and machinery for us to reach, our FY27 guidance.
So new capacity coming in, that's exciting. Let's come to the second part of the question, which is, whether you're shifting your focus and will exports continue to be a lion's share of revenues, which is, I think, about 87% now?
Yeah. So export has always been the focus because, today in every sector that we work with, we're working with the sector leaders. So, whether it's energy, aerospace, defense, or oil and gas. So we work with the top customers that have about 70 to 80% of the market share. So export will definitely remain our focus. Our export business should always be over 85% plus in terms of our contribution. But in terms of the, strategic contracts that we're looking at, we are, adding value to a lot of these indigenous nation pride contracts that like the one that we received from GTRE. Because, what is important to understand is we have shifted, we've moved into a completely new capability area where we were manufacturing components, and now we will be manufacturing a complete engine. And how many companies would you know in India that have the ability or the capability to manufacture a complete engine, assemble it, and deliver it? So that is where, Azad is right now in terms of capability, and a lot of exciting contracts with our customers are being discussed right now. So although we did add about 1,200 crores, there is a lot of other important discussions that are happening, which we will update you all whenever the time is right.
So Vishnu, last question, two-part question. So from 3,000 crores, what do you expect to end the year with in terms of order booking? Part one of the question is that. Part two, what's the FY27 guidance? Sorry, I missed that. You've closed 2024 or FY24 at 341 crores. What's the FY27 guidance?
So FY27. See, FY27 is too far.
I heard you say that you want to meet your FY27 guidance. So I'm asking you.
No. So So the point is, we are going to grow at about 25 to 30% until the new capacity comes in. And once the new capacity comes in FY26, which will be an inflection point for our growth, then the rate of growth will grow upwards of 25 to 30% from there. That's something that I can tell you right now. And in terms of the
order book,
in terms of the order book that you asked me, we should be adding another 1,000 to 1,200 crores approximately from the new contracts that we're looking at this year.
Okay. Well, we wish you all the best for that and more. Thanks so much for joining in today and giving us your perspective, Vishnu. All the best for the year ahead.
Thank you so much for having me. Thanks.
Well, at 60 crores of PAT and circa 8,000 crores of market cap, this is not a cheap stock by any stretch of imagination, but plans are promising.
No, but if you are going to increase capacity massively, if your order books can go up massively, and defense is just this very exciting area, you don't have too many options to play there, then you might see more of a bump up. But the defense theme sort of continues this morning on India Market Open, because we'll take a very short break.